The best multifamily deals are rarely found on public listings. The problem is most investors rely on LoopNet, CoStar, or MLS, competing with everybody else, so thousands of other buyers for overpriced properties. We have to go through 200 properties to find one shiny penny. So if you're serious about scaling your portfolio, you need to access deals before they hit the market. And today we're going to be breaking down proven strategies to source off-market multifamily properties, build relationships with the key players, and secure high-value deals before the competition happens. John, it's great to be here with you.
So good to be here, Mark. We were just talking about our weekends and, kind of laughing when you can't really remember it. I guess, it's a good one, but we're circling deals. So we're actually working a lot on the weekends. So it's like juggling the kids and the workload. But I wouldn't have it any other way, man. It's, when you find something you're passionate about and that you love to do, it doesn't really feel like work, right? And I think that's what we both done here with Faris Capital Partners. It's a really exciting opportunity to not only improve the lives of like the residents that we serve, but make money for our investor clients. So, just really happy, man. I'm really excited for 2025. It's going to be a great year for Faris Capital Partners and for our investors and residents. Yeah,
no, for sure. And that, coming into this business, John, the investor experience, like providing that best investing experience, was the only real big driver. Like there was a significant driver for me. But what actually came more to light that is actually, we'll say that's competing with that right now is the resident experience. And so providing the best living experience in the world, that's something that I've seen now full circle in regards to going in, executing on our 28-day full transformation plan and seeing some of the feedback that's coming back from the residents and getting that, to me is just extremely motivating. And so, when you get a lot of wins like that coming, you see, Google reviews coming up from the residents, 5 stars are coming across and some of the feedback that we're getting right now, to me, it's like, that's really exciting. And that talks to our BHAG, or Big Hairy Audacious goal, is to provide 10,000 best living experiences for all of our residents at Faris. And at Faris Residences, that's our branding. And so that's like super exciting. And time is flying right now, especially as we're going and we're acquiring these deals and we're seeing lives change.
Yeah, no, it really is. I think our secret weapon in a lot of ways is that resident experience. And, one of the things we've touched on previous podcasts is when we're looking at an acquisition opportunity and we see bad reviews, we get excited because it just goes back to, the renovations are important, making sure that the living arrangements are just top notch. I mean, you got to get that right. But that's kind of like table stakes. The things that really make a big difference are in how you treat people and that resident experience. And so we're seeing it in every deal we've done. We are exceeding our pro forma projections in some cases by 5, 10, 15%. And if you look at it, what's really making the difference is that resident experience. And so when we have reviews coming in from people that have been on the property for years, or folks that are just referencing, I've never actually felt like the leasing manager really cared for me. And so it's challenging, right? Because it's not about, just telling people you got to be good at customer service. It's actually going and finding people that just have a genuine love of people, which is one of our core values. So it really starts with the right person, on the leasing side, right? The leasing center, the property manager, and the leasing manager. Because if you get one of those two people wrong, then the whole thing falls apart. And so we get that right from the start. Then they take great care of those residents, who then in turn take great care of our investors. So it's our secret sauce
for sure. And John, before we actually formed Faris Capital, it was a really good experience for me. I had actually partnered with a couple of other groups when I had started, and it was really good because different operations teams operate differently, and so we got to see some really good things and some things maybe we do a little bit different, and so that was like a really good experience, and basically it helped form the foundation of our overall thesis and approach to investing and how we're handling these value add deals, and so. Yeah, when you can do it and build it and go out and hire the best expertise that have done it for decades, that's where you start to see, we'll just say the flywheel starts moving a lot faster in regards to making impact. And we are getting closer to that next deal right now. We've been, we'll say, actively and going after properties, but the reality is that sellers' expectations just have not come in line with what our underwriting's saying. But with that being said, we're starting to see that loosen up a little bit right now. So we are getting closer to the next deal. If you're not on our short list, you want to make sure to get on that. And you do that by going to fariscapitalpartners.com. And actually, you can either book a call with us, or you can actually go on and make your reservation so that you are on that short list to be informed when our next deal comes down the pipe.
Yeah, you don't want to miss out. I mean, at the end of the day, whether you invest or not, you at least want to have that opportunity to get your eyes on it. And, what we're going to talk about today, in fact, if you look, Mark, as of when we record this podcast, we've acquired 4 assets. 3 of those were off market. And in other words, we worked through brokers, but through broker relationships, we were able to get a peek at deals before they were publicly marketed. And when you have that kind of an edge, you're not competing with 30, 40, sometimes 60, 80. So when a deal's publicly marketed, Mark, it depends on the nature of the deal, the size of it, the asset class. Those factors all come into play. But say a 200 unit plus B class building will probably get 80 to 100 offers in a good market in the Southeast. Under 200, you lose some of the institutional investors that, just prefer the larger complexes, but you might be competing with 30, 40, 60 offers. And so we can win in that environment. And we won our Largo deal with 40 other competing offers. But we had to step up to the plate and offer a little bit more money. And it was worth it. And we didn't put our best foot forward on our first offer. We knew we would probably have to negotiate. So we left a little bit behind just for that reason. But those off-market deals, we won without any competition. And so when you have that edge, man, it's just, it just goes back to the right asset at the right price with the right business plan. You can have some phenomenal results here. So excited to dive into this topic and teach some of our listeners, whether, it's just learning more about our approach or maybe some things they can take away if they're looking to find an investment property for themselves or their family.
Well, John, and to start the conversation, I think context is really important. So between yourself and myself, we've either personally negotiated or we've trained agents to negotiate. It was well over 30,000 transactions.
Yeah.
So we've seen the good, the bad, the ugly, and we've seen where the good deals and how the good deals are taken down. And so it really comes down to relationships in a big way. And so understanding what is important to the other side whenever it comes to negotiation is pivotal. And so, especially with these larger assets, even if you are a known closer, if you are not actively pursuing and building in your top of mind in that broker's mindset. First off, it's important to note that 95% of these larger 100 unit plus apartment deals go through brokers. Mm-hmm. Brokers are the gatekeepers. And so you want to make sure to build strong relationships and to be top of mind, because if you're constantly top of mind, you have a much higher likelihood of being presented an offer. Right. And if 95% of these deals, and it just makes sense, right? Because if you're selling a 20, 30, $40 million property, it's not likely you're just going to, take a phone call from Joe Schmo and say he's like this random buyer and sell it to them. You want to make sure that you're doing it right. And so by hiring a broker, we'll just say there's a higher likelihood of the seller hiring a broker than perhaps a 300,000 or 400,000 single family property. So majority of these are through brokers, and the relationships and how you form these relationships is the starting point to being able to get some of these off market deals.
That's right. And this is a very small world, so to speak. So in the broker community, there are maybe, say, in the state of Florida, 50 to 60 brokers that you really have to get to know. And so that might seem like a big number, but if you compare it to, say, residential real estate, there might be 100,000 realtors in the state of Florida selling residential real estate, right?
There's like 2 million in the US and 100,000 in Canada. So there's a lot. There's a lot of residential. And John, for whatever reason, down in Florida, it seems like every other person has their license, and they kind of sell one or two part-time to kind of friends and family. So
it says
a lot more than commercial.
100%. There used to be a joke actually, so sort of pre the Great Recession in '08, so that sort of like 2000 to '07, that there were so many realtors in Florida when you got pulled over for speeding, the cop would ask to see your real estate license and not your driver's license. So 100%. But, of those 50 or 60, and what really happens is most of these guys work on part of a team. I say guys, it could be women, of course, as well. But, there's sort of like the senior VP level, and then beneath that, there's directors. So they have all these titles and everything, but they generally work as a team. So, for example, we closed a deal with Berkadia, a two property portfolio. And, when that closing occurs, that team has a call with all the other teams around the United States on a weekly basis, sharing wins and successes and challenges. So if you did a bad job communicating or you didn't get to the closing table, every broker in Berkadia is going to be aware of that. So it gets very small very quickly. And so those relationships, you nailed it, is absolutely critical to success. And even when we're talking off market, we're typically still talking about working through a broker. And so being top of mind, you said it, right? It's so important. So a small little tip that I mention to people when they ask is like, when I see a closing announcement come through from a broker, it's an e-blast. They send it out to everybody in their database, but just sending a nice quick email, personalized, just saying, hey, congratulations on the closing. That looks a killer deal. Best of luck to you. And just by doing that, I've literally had people respond and say, hey, we're actually about to take something to market in 3 weeks that might be a fit for you. And now all of a sudden we have a head start on a deal just by just showing a little like kindness to say, hey, congratulations, you closed the deal. And right now it's hard to close deals. So when brokers are closing deals, it's worth celebrating and talking about. And so just those relationships, right? It's like, it's all about being top of mind. And so when they have that deal, they think of you because while I mentioned there might be 40 or 50 or maybe 60 brokers in Florida on the commercial multifamily side that you really got to get to know, there's probably 1,000 buyers, that are competing in a sense. Now, they might not all be looking at that one deal, but it just goes back to how are they going to remember us amongst all those other buyers? It's by calling them, responding to their LinkedIn posts with like great insight. But the reality is it has to be real and genuine too, right? You can't just fluff your way through it or just, kind of BS your way through it. It's got to be real. And so that's why we got a guy like Joe Lowry on our team, because with 15 plus years experience, he knows all these folks and he has relationships with all these folks. So in a sense, we bought his relationships by bringing him onto the team. And then we can go in alongside him and have a little bit of a secondhand conversation through Joe and develop a faster relationship for you and I, right? So critical component here.
Yeah, no, for sure. Yeah, moving forward there, when it comes down to building relationships, there's a really good book called Giftology. And that was one of the things that we did right off the bat is we figured out who the top brokers were and we actually gifted them. It was a strategic gift. And so in there was like a Yeti, we had some little treats in there and then we had a little note card in there and actually a great book, one of my favorite books, Think and Grow Rich, we sent to them as well. And, it was just like one of those shock and wow little gifts. But, is that going to get us the next deal? Not on its own. But what it does, it's one of those, the first steps of many to be able to get top of mind. And, it creates that role of reciprocity. If you give, there's a better chance that they'll give back to you. And so it starts the relationship or it starts the conversation. And in a lot of cases, these brokers, they're getting hundreds of calls and majority of them don't have the ability to close on these larger assets. So you want to make sure that you're top of mind and not just like a one-hit wonder, but you're constantly in front of them because you just never know when that next great off-market deal comes to the table. And what they'll do is they'll select their top potential buyers and they'll go to those buyers before going to the open market in some cases. And so having that relationship and being top of mind and being able to deliver these value adds or these wow moments for them, it really sets you apart from the thousands of other buyers that are out there.
That's right. That's how we met, Mark. I mean, you sent a wonderful gift to Mark Spain Real Estate's office where I was working at the time. And I would have called had you just called me, and I would have returned the call. But that was like such a wow moment. I was like, I got to find out what this guy's all about. Like let's connect. And, we established a relationship, and here we are all these years later. So a friend of mine actually just started a franchise business. It's residential flooring services. So hardwood floors, carpet, et cetera. And so she wanted to expand and start building relationships with folks in, like larger, not necessarily developers, but, fix and flip renovation type companies. And so I told her to grab that book, and she employed that approach, and it worked like a charm, because it's Robert Cialdini, right? The book Influence is right behind me. That rule of reciprocity. When you do something like that, it almost creates an obligation for the person to get back with you. And it's interesting. One of my best friends is a multifamily broker with Colliers down in Florida. And he wasn't making fun, but he was kind of like, I just got this big box. What is this? I got to go into the office. I work from home. And so he's like, I'm going to go pick it up tomorrow. And he called me, and he's like chewing on the taffy we gave in the box. So he's like, man, this is some really good taffy. And so he's like, and he always sends me photos because he's got, his full out Yeti whenever he's walking around with the kids or whatever, drinking coffee, he sends me a photo. So look, it works, man. It really does. So anything to get the attention. And then from there, it's like, can you close, and are you easy to work with? So another thing we do is whenever a broker sends us a deal, we always send feedback, whether it's for us or not. We send them, here's why it's not for us, or here's why we love it, because ultimately that broker wants to be able to go back to their seller with some feedback if the deal's not trading, right? And so just those little things all add up to a big whole, which makes the relationship, once again, the key factor here.
Yeah, right on. I mean, John, when you're actively selling, I mean, it would have been phenomenal if the buyers that walked through the property proactively sent you feedback. That's actually one of the biggest challenges right now, is when there's a buyer that goes through the home with the agent, and one of our listing agents on Faris team up north of Toronto, we run a brokerage up there as well. They're following up for feedback, and the agent's just not getting back to them as to how the showing went. And so, being brokers ourselves, like, we understand what these guys go through. And so by proactively providing that feedback without them asking, it solidifies and it builds that ice up. When I say ice, the goal for us whenever we're building relationships is to build thick ice. And so every time you do something that's negative, you actually, you lessen that ice, and, the relationship will fall through when you do enough things to break that trust. And so the more you can bring that up, we call that like thickening ice. Or another way of looking at it when it comes down to relationships is, think of a relationship as a bank account. Most relationships are bankrupt. So there's too many withdrawals that are made. And so when you are building a relationship with a broker, if you just call them up and ask for something, that's a withdrawal. So you want to be able to give, ask. Give, ask. And so by doing that, you're always in surplus in that relationship. And this idea of looking at relationships in regards to like the way like you would at a bank as a bank account, then you can proactively think, okay, have I made a deposit in that relationship we'll say in the past 30 days, 90 days, a year. And when you think about it that way, this is great for family as well, and friends and all the rest of it. But with brokers especially, they may not even be consciously thinking about that as a relationship that way in regards to, they're probably not. I mean, this is just a different way of looking at it, but they know when you're in the surplus, because when they think of you, they think of, oh, this is somebody that, is a giver, and they're not just all about them. And so that's where it goes to the next step, as you had mentioned, John. The ability to close is huge. And then there's, the communication side of it and being easy to work with.
And kind of that easy to work with, that can mean a lot of things, right? It's just the communication. It's, and I would say proactive communication, right? So following up with them. Don't wait for the broker to call you for an update. But, another way I think about it is even just being very precise and clear on what our buy box is, right? And so that way, a lot of these brokers are working some of these off-market strategies we're going to get into personally, right? Because that's how they get deals and how they get listings, right? They go out and they look for distress, or they look for sellers that have owned for a certain period of time. And we'll get into those strategies. But if I call up a broker and they're like, well, what kind of deals do you like? Well, we like them all, just send them all our way, right? Like we're like a pain in there, where if I say we only want to buy stuff that was built in the 80s, 90s, or early 2000s, 100 to 200 units, Class B or Class C, that we can get to Class B, B or Class A, in this particular city, right? Now, all of a sudden, they have real ammunition that they can go out into their database, because once again, these teams generally have a couple of people on the team whose sole job is cold calling operators and owners for potential listings. So they're keeping track in their CRM, their customer relationship management tool, and they're coming in and they're going, wow, this actually might be a good fit for Faris Capital, because this is right in their buy box. So it just goes back to just like really clean, easy communication. And so with those gifts, just to be clear, we sent a 1-page flyer with our buy box, spelled out exactly what we're looking for, the types of deals we like. We include a couple success stories on deals we've already taken down. So it's just very easy for them to think about us when that kind of deal comes along, where if you say, well, we'll buy anything, you're never going to be thought of, right? Because you're just too broad. You're not specific enough. So that's another factor when you're listening to this. If you're trying to build these relationships, really have a tight, disciplined buy box and be very clear on what those things are, so that broker can go out and help you find exactly that. That's a critical piece here.
Yeah, for sure. And so this is where one of our goals with our investors is to get them access to these off-market deals, where on it as an individual basis is very, very difficult to even get one. So if you were to break into this space, you want to make sure that you close a deal at all costs. So getting that first one is really important. And then the second, third, and fourth, it'll get easier because you then have a track record. Mm-hmm. And so for us, now that we have that track record of closing, and we have broker, we'll say reviews or testimonials, right, John? We have that. Yeah, we have that in writing now.
Yeah, that's right. So when we send an LOI out, letter of intent, we include those testimonials. Exactly right, Mark.
Yeah. So this just makes the offer that much stronger, where you've proven that you can actually close on these deals. And so that you're more likely to get those. And just think of the reason why is because this is potentially hundreds of thousands of dollars in commission to the broker. And so just think of it. Human nature is, if they select a buyer or they advise a client to say, hey, this buyer looks good, and if they don't follow through, then that broker has mud on their face, and they may cancel. That seller may cancel with that broker, and they lose on hundreds of thousands of dollars of commission. The question is if you don't follow through, or you don't do a good job, and that broker now has mud on their face, do you think that he's going to give you another deal? Especially, these are like trophy assets. Like they award these deals. They're very, very rare. And so not only will he not give you the next deal, he's going to let his entire office national, right, John?
That's right.
Well, they're going to let everybody know that you didn't close on the deal, and they're going to know the whole story. So your reputation in this business, and the brokerage business, selling homes on the residential side, it's huge. But in this business, it's such a small circle. If you do something that's shady, or you don't follow through like you said you would, or you start, nitpicking at the last minute. Negotiating is one thing and going after the big numbers. But if you come back and you start negotiating, the tree is overgrown a little bit, and you're going back asking for $1 million off the price, the broker's going to remember that, and they're going to share that story. And so you do not want to get on that list, because if you do, it's very hard to get off that list. And you want these off-market deals presented to you.
That's right. And what we call that in the industry, or the term you might hear, is retrading, where you go back and renegotiate after the deal is already sealed. Now, what could happen is maybe in due diligence, something's revealed that, the owner didn't know about, the broker didn't know about, we didn't know about, and it's a real thing. And we have to address that. That's negotiation, right? Where, oh my gosh, there's a potential, issue with the foundation on one of the buildings. We're going to need to shore that up. And that's an unexpected expense, and it's fundamentally changed the deal. That's a different conversation. And that is a conversation you absolutely should have if new information is revealed during due diligence that nobody knew about. But if it's something we could have seen or caught before going under contract, now all of a sudden that's on us. So if the broker offering memorandum states very clearly that the roof needs to be replaced, but we just breezed through it and missed it, now you're making it their problem. But what some operators do, Mark, as you know, is a day or two before closing, they come in and say, well, we're going to cancel unless you cut $250,000 or $500,000 off the price. And they put the broker in a very uncomfortable situation. The seller's going, well, hell, I'd rather close than not. And that is broadcast once again to the entire community. And that, whether it's that broker talking directly to his brokerage, and all the other brokers within that brokerage. But guess what? They probably know guys at other offices too, and they're probably going to share that story along. So actually, one of the things we tell brokers when we first are introduced or first meet them is that, look, we promise we will not retrade on you if it's something that, we could have seen or caught prior to going under contract. We're just not going to come in and do it. We're going to close. And that's why we target 200 units and below right now, Mark, because we know comfortably that we can raise that capital. So we're not going to get ahead of our skis and take down too big of a deal when we don't know for sure we can get that capital. Because Warren Buffett said something like this, I'm paraphrasing a little bit, but it's that idea that it takes 20 years to build a good reputation and 1 minute to destroy it, right? And that's what we're talking about here. You could absolutely destroy your reputation and opportunities in the future if you make that mistake and retrade or, don't close for that matter, right? That's gonna put a big black mark on your reputation.
For sure. So, John, for the listeners out there that ask the question, why on earth would a seller want to do an off-market deal? Why would they want to do an off-market deal and not get it fully marketed and out there on the open market? Like, what would be some of the benefits of doing an off-market deal, like how we secured that Charleston deal, for example?
Yeah, I think for the seller, it's kind of probably a little bit of like what they call the paradox of choice. When you have 50 to 60 offers and they're all ostensibly the same, what generally happens if, say, for example, it's a fully marketed deal, let's say you get 60, probably a third of those are, flyers. In other words, somebody just throwing out a crazy lowball offer just to see if it'll stick. A lot of these operators might have young, 25-year-old people that just sit in an office somewhere and underwrite deals and jam out LOIs. But that's not us. When we target something, we want that deal. And so it can be stressful for a seller to have to navigate that process and for the broker, right? Because, once again, it's like who can close. And so what we found is with the sellers that have accepted our offers, we've met them at their guidance price. The deal works out at that number. And we're able to present clean terms because on our end, we know that if we don't work this deal out, it is going to be publicly marketed, right? So we put our best foot forward. Now, we do it in a way where we're still conservatively underwriting. We're still adding in the reserves in the CapEx reserve that we mentioned on prior episodes. But we're able to simplify that process for that seller so they're not having to navigate really what could be a 3 to 4 month marketing process, right? So it's time, and time's the one thing we cannot make more of nor get more of, right? So that's number one. And then I think number two, it's a lot to navigate when you have all that attention. So, sellers who work with brokers are often forming long-term relationships. So, they're working with that same broker over and over again. And so I think it's about simplicity and speed is really what it boils down to. Is that your take on it as well?
Yeah, no, for sure. And I do think like having a bird in hand is really great. And so that's like for us, for example, we were informed on Friday, we flew it on Monday, LOI accepted Tuesday, and pretty much we had an agreement of purchase and sale. Like it was less than 2 weeks. We had that all buttoned up and we proceeded to close, and it was assumable loan. So we started that process. So we got ahead of it. And so when a seller goes to open market, and John, over the last 12 months, there were a lot of these. They went to the open market, they did all the advertising and marketing, and they went out there, and they just didn't get their number. And so they when it goes out like that, it's a flag because they were on the market in the past, and then they got to come out after and like, oh, that asset came out last year and it didn't sell, right? And so you want to make sure that when you go to market, you're gonna sell, because if you don't sell, that's like a failed listing. And so by doing an off-market deal, you can gauge the marketplace really well. And that's really great for sellers to say, hey, listen, if I get this number, I'm good to go. And, it's like a bird in hand. So the reality there is that the sellers, if they want convenience and they want surety of close and they want to move quick, then just doing a quick off-market deal with proven closers at the end of the day is a major win for them. So this does happen out there. The key is the relationship with the broker. Now, there's about 5% of the deals that don't go through brokers. So with that being said, if you want to tap into that 5% and try and find that, John, what would a potential buyer, and by the way, what I would say is with that off-market deal without a broker, okay, that will be more prevalent in the lower unit count apartment space. So we'll just say, 4, 5, 6, 7, 8, 9, 10, like up to 50 units. You might get a residential broker doing that, not a commercial, but you might be able to find those off-market deals where you're dealing direct with sellers. So I know, John, we talked about this a little bit in regards to going direct to seller. Our primary approach is always with brokers. We have a lot of great relationships with them. But what would a listener do if they want to find an off-market deal and with no broker and go direct to seller? How would they find something like that?
Yeah, 100%. And I would say too that even when you do this approach, what you may find is that when you find that owner that you actually they're enticed and they're interested in selling, what often happens is they'll still engage a broker, right? Because they want that representation, because these are complex deals, right? So for that listener, what I would think about is leveraging the tax records that are widely available. So proper software like CoStar, the MLS, if you're in the residential game, to your point, some of these smaller unit count buildings will often be, you can find that information in the tax records in the MLS. But you want to look for owners that have owned the property for a long time. So the Strawberry Station deal we just closed in Charleston is a great example. The guy developed it in 08 and owned it since 08. So he's made a lot of money on it. And it's not aged in a negative way. It's just, the guy's owned it for a long time. So he's gotten great returns on it. And so that's probably somebody more likely to sell than somebody who's only owned the deal for 1 year. In fact, we had a couple of people reach out to us about our Largo deal like 2 months after we closed. And we're like, well, I mean, unless you're willing to write like an absurd check, we're not selling right now. And we're very kind about it, right? But you see that sometimes. So longer term owners. Another thing you can target is distressed owners. So one way you could do that is by just driving around. So say, for example, you want to invest in Barrie, Ontario, you can just ride around the market and look for buildings that look like they just could use a little love and care, maybe just not maintained properly. You can also look for places. So for example, in the US, there's data sources where you can see when the person's behind on their mortgage payments or on a watch list. Now, you can end up on a lender watch list because you have not been maintaining the property properly. So in other words, you could be paying your mortgage, but these lenders, these are big deals. So they're not just trusting you. They send people out to inspect from time to time. And so if there's down units or things like that, you could get watch listed. So that's really the best place to go, is sort of like in the tax records, look for those longer term owners, owners that are in some sort of distress, whether the property condition or they're behind on their mortgage, and start there. So different approaches. The number one approach is always the best. That's picking up the phone and calling the person, right? Because at the end of the day, emails, we all get thousands of emails a day. Direct mail is another great approach. So we've actually tested that a little bit in the Charleston market. We went out and we found owners that had owned for 10 plus years, and we send direct mail to them. We got a few nibbles, but no bites quite yet. But if the worst thing we did was plant a seed and eventually that comes back around to us in a year or two, that's great too, right? Email could be another approach. If you have email addresses and you can't find the phone number, or maybe you call and leave a message, so you send a follow-up email. Stopping by, right? So for that listener, to use your example, maybe they're looking for that 4 or 6 unit building. Maybe knock on the door and see if the owner's there, or if they have a property manager there, who is the property manager, and engaging that way. But at the end of the day, it's like anything else, the fortune's in the follow-up. So don't just send one piece of mail or make one phone call. You got to continue to follow up and stay in touch. And so once again, when we've sent letters out, we've gotten some nibbles. So we had a conversation, we logged that person in our CRM system, and we schedule future follow-up, because guess what? In 3 months, their circumstances may have changed, or we planted that seed that's now grown into an idea of, maybe we will sell. So those are some great approaches. If you are a current investor that owns residential, real estate, commercial, whether it's a smaller apartment building or even a larger one, lean into your property managers, right? Because a lot of these property managers work across multiple investors or operator groups. And so they may know of somebody who's thinking about selling soon, right? So, you're paying this property manager a lot of money. So, it's about a reciprocal relationship. So it's like, hey, do you know of anybody who may be thinking about selling? So those are some approaches that we've leveraged in the past. But to your point, these deals trade with brokers. So building those strong relationships with brokers and positioning yourself to get the off-market opportunities from them is going to be the best use of your time, even candidly for some of those smaller unit buildings.
Yeah, right on. And so the network that you have and the vendors that you have, just asking them the question, if they know anybody that is looking to sell off market, like you'd be surprised just by getting it out there. So any trades that you're working with, they go into a lot of assets in your area and they might be able to find deals for you. You can offer them a finder's fee. So this is something that, now you have active people that are actively trying to hunt for you for properties, right? And so that is a really great way to go out and find some of these off-market deals. And so, John, you nailed it. Like it's the fortunes in the follow-up. Most people, it's just one time, but it's like much rain wears the marble. Over time, if you are just always in front of them, next time they're thinking about selling, they're going to feel like obligated to at least give you a shot.
Yeah. And you nailed it. I mean, look at that, like the contractor, right? The groups that are doing these renovations, they're often working with other owners and operators. So they know who's behind on maybe paying them, right? I mean, that's a real thing that could occur. Property gets in distress and all of a sudden they stop paying the contractor. So the contractor says, well, I think these people might be selling. There's other approaches, right? And so some of these are state specific because privacy laws are different in Canada. But for example, you can look at eviction records, right? So does an operator have a lot of evictions occurring? So that could signal that they're mismanaging the property and they're putting the wrong residents in, which is leading to these evictions, which means the property's in distress. Delinquent property taxes. That's another avenue you could approach where you look who's behind on their property taxes and approach those folks about a potential sale. So a lot of ways you can go about this, but for us, simpler is better. And when 95% of the deals trade with a broker, that's going to be your best source for off-market deals as well as on-market deals. And we look at everything, right? I mean, just because it's market, it doesn't mean it's a bad deal. In fact, some sellers, I mentioned the time factor and the convenience and the simplicity factor, but you're more likely probably to get a little bit more money in a competitive process. So if they have the time to run that process, they'll do it. And that's not to say it's a bad deal, but it just means you have to be firm with your underwriting and know at what point you're not willing to cross. In other words, you're not going to overpay just to win the deal. And that's why you always say it, but those diamonds are about that 1 out of 200 that actually works for our model. So I think it's really about, keeping it simple and keeping it all about relationships first, strong relationships with brokers, strong relationships with your property manager and your vendors, and just making sure they know you're buying and you're out there looking and they'll bring those deals to you.
Yeah, right on. Yeah. And so out of all the experience we have, if you were to just simplify it, just the key here is just to make it simple. So the first step is just to reach out and make contact and just asking them, would they be open to have a conversation about selling, right? That's step one. Step two is understand the seller's motivation. Are they looking for a quick closing date? Is price more important? Maybe they want to do a vendor take back and they'll hold a mortgage for you. And, this is really important to get an understanding of what their motivation is. John, I've had more deals where we're representing the seller for the brokerage up in north of Toronto. And so we would get these offers sent to us and they had no idea what our seller's motivation was. They just emailed the offer in. And so picking up the phone, that was always my first step. I would call the agent. I would say, hey, listen, why is the buyer, buying? And I would get the buyer's story because I was representing the seller. But if you're doing an off-market deal, it's really important. Any deal you're negotiating is to find out what is the motivation for the seller that's selling. And then you can structure an offer that's appealing. Like I would never assume that price is always the most important thing. In a lot of cases, it's not. So step number two is understand the seller's motivation or what's the outcome that they're actually going after and what's important to them. That's a really important step. Step number three is offer a win-win deal. So you might not be able to go high in price, but you can offer flexible timelines. You can offer we'll say a hard earnest money deposit, right? So you can go hard day one so that they know you're not going to come back and retrade. So just offer a very clean terms deal, but maybe the price is a little lower, and that might be a win-win for the seller because they find that terms are more important perhaps than the price. And step four, being able to move quickly and be organized. So this is something that if the seller presents an opportunity, I mean, in real estate, these deals, they come and go very quickly. It's not like you can go home and think about it for a week. It's like when the seller presents something to you, you got to be able to move on it. So having your power team together ahead of that and being organized, so when a opportunity comes up, you can actually get in, do your due diligence quickly, and take a swing at it. The buyers that are ready and willing and able to execute quickly and move fast, those are going to be the ones that win long term.
Absolutely. Mark, it's so funny. You mentioned the example there where you just get an offer emailed over. We had cycles in Atlanta, and most recently I'm thinking about post-pandemic, sort of late 2020 to early 21, where interest rates were like 2 and 3%, and we had very limited inventory on the market. We would sometimes get 100 offers, and I guarantee you 90% of those people never even picked up the phone to call the broker to ask. And you're right. Sometimes for a seller, it's about a fast closing. Sometimes it's about, I have no time constraint here. I want the best possible price, right? And so you think you position this great offer, but you haven't even taken the opportunity to learn about the seller's motivation or really the broker, not necessarily their motivation, but their preferred style of working. And, by building that relationship, it's like, I know this broker just wants no fluff, just tell them what it is, and some you got to talk to for an hour, right? And so you learn the relationships, and you can kind of play the dance or do the dance, so to speak. And so you'd be surprised that if you're listening to this and you're working with a real estate agent, just ensure that they're actually communicating with the listing broker before they send your offer over. I mean, just that alone can be the difference between you winning the deal and not winning the deal.
Yeah, that's really great advice. Like getting an understanding what's important to the broker as well. That was really good insight there, John. And yes, if you are working with an agent, making sure that the agent is asking the question. And so, you can hold your agent accountable to
ask them the question. What's the seller's motivation? If they don't have an answer for you, they didn't pick up the phone.
If they give you a BS response, like, well, versus like, this is what's going on because I asked the broker that, like, they'll be able to read on that pretty quick. But 100%. I mean, just think, like, if you don't ask the question, like one of my favorite is to at the end of the conversation, I'll say, is there anything else that I should know? That one last question has given me half the time they'll give you something extra. They'll say, well, you know what? This closing date is really important because, they have, there's a family member that's moving. They want to close before this date. Right. It's like, you'd be surprised how many times they wouldn't told you that up front, but that last question, it gives them an opportunity to think through if there's anything else. And a lot of times I had these golden nuggets that actually earned me to be able to better position and structure the offer to be able to get that competitive edge. And John, as you know, the differences between getting the deal and not getting the deal, it comes down to inches. It's like that movie, Any Given Sunday. It's like life is about a game of inches, right? Yeah. And it's the same with these large multifamily properties is a lot of times you're very close to another offer. Yeah. And sometimes you might even be less than the other offer. And, one of our deals in Largo we had a competitor that actually bid more than us, but we structured it better. We had a better understanding what was important to the seller and the broker. And we structured it in a way that actually positioned us as a better offer, even though we weren't the most amount of money.
Yeah, that's right. You actually kind of just blew my mind, Mark, because I literally just watched Any Given Sunday a week ago. Yeah, well, I'm kind of a movie guy, and maybe because of the Super Bowl or something, I was like, I haven't seen Any Given Sunday in a while. It's a great movie, but anyway, that was just kind of funny timing. You called that one out. A movie from the '90s that's largely been forgotten, but no, that's awesome. But yeah, I think maybe on a future episode, Mark, and maybe we'll do this one next, right? How we structure our offers to stand out amongst many other offers, right? I think that could be a good one that we can really lean into. So, just some key takeaways, off market generally means less competition, therefore better terms, which of course will lead to better return on investment. So by building strong broker relationships and getting access to those deals before they're broadcast out to the broader buying public will give you a competitive edge and help you and your investors win. And then Key factor here is it really is going to be, even off market, it's going to be about these broker relationships and then a little addition to that, vendor relationships. That's really where you're going to win these deals. It's not to say you shouldn't try some of these other approaches, scouring through the tax records and looking for distress. There can be some fruit there, but if 95% of the deals are trading through brokers, that's where I would focus my time as a listener here, is building those relationships so that you get first access look at these deals before they're sent out to everybody else.
Yeah. John, I was just thinking that if you're truly serious about finding these deals, you want to be able to create a system that is a consistent system that will position you in the best light to get the deal. And so it's one thing if you're actively and you're doing everything on your own and you're going after, say, the 5% that are not with the broker. But if you don't create a system to do it on a long-term basis, any wins that you get will be very short term. And so for us, what we've done is we've created a system where we actually meet every morning. And that's something that Joe reports on, is his number of conversations that he has on a daily basis. And so the machine you want to try and build, there's a really good book, The E-Myth, and he talks about like systemizing the business. And so when you have these strategic ongoing follow-ups, you have a system that you follow, that's what's going to position you to get the opportunities when they come out, because you don't know when they're coming out. So you got to have this system set up in place so that you can capitalize on those opportunities. By doing that, it positions you way higher up on the totem pole of getting these deals and awarded these deals, because they're again, 1 in 200. They're very, very rare. So by setting up that system is what's going to give you the highest probability. So if you are looking for off-market deals, and I would say, John, that the number of off-market deals when you're getting below 100 units would be actually higher than, we'll say, 5%. Above 100, it's like 95% of brokers, 5% are not with brokers, and where you go direct to seller. But when you get in the lower count, just create a system that's ongoing, because things will work, but a lot of times you got to do it over and over and over again to be top of mind and get those opportunities where other people don't.
That's right. Yeah, the systems point is such a big one, because, often when, you look at a business, why one scaled and was successful and one didn't, it's the lack of systems that is why the business failed. And, I've listened to a lot of podcasts. I've talked to a lot of entrepreneurs, and people overthink systems sometimes. And that's a great example of a system. Just saying, on a daily basis, I'm going to have X amount of conversations with brokers, right? And by doing that on a consistent daily basis, it gets you those results. And so we didn't have to go build out some complicated 15-page document. It's just like, let's figure out the right amount of calls. And then what happens is, over time, you start to find the success. And then you can sort of say, well, if we call 10 brokers a day, we got X results. But what if I call 20 a day? What would that mean? Right. And so all of a sudden, it's not a question of what do I have to do? It's just how much do I need to do? Right. And so if you're an entrepreneur, which listening to this podcast, you more than likely probably are, systems can be very simple, right? It's just about having a structure and an accountability system in place to ensure the most important things get done.
Yeah, right on. Well, if you are interested in investing or actually just seeing what our next deal is, make sure you go to fariscapitalpartners.com, and you can book a call one-on-one with us, either John or myself, or you can actually go in and just make a reservation to get on our short list. That's Faris Capital Partners, Faris, capitalpartners.com. Make sure you get on that list, because you don't want to miss out on the next deal. It's looking really strong. We're getting closer to that. So thanks for listening, guys. If you enjoyed the show, please subscribe and share with other high net worth investors that you think will benefit from it. Thanks for tuning into the Multifamily Investor Playbook. We love and believe in you guys. Keep dreaming and investing big.